We always buy 100%, except once we bought 50%, and that caused us quite a few problems. We buy companies from people. These are my heroes. This is somebody who has built up a company over his whole lifetime.
But you said like one trick that allows you to avoid fraud.
Oh, the vendor take back.
1, 2, 3.
Now I can hear you, Ben.
Okay.
Very good. Hey, nice to meet you. Neil, how are you?
Yeah, pretty fine.
Yeah.
Busy day, but I just stopped trading for the day.
Yeah,
It was
well, interesting. Yeah. So Neil is a day trader. What were your trades today, Neil?
oh well, I just took a counter trend trade. I shorted the NQ futures right ahead of the open, and of course, a minute ahead of it, I closed the short because if you check the chart, you see what came next.
The
So
Nasdaq?
yeah, it's
Yeah.
basically ripping to the upside now.
Wait. So tell me. So what did you miss? Which part of the trade did you miss then? If when it's ripping now. Were you short before?
Yeah, I just shorted. Yeah, very
And
quick trade at the
yeah,
end of it.
yeah.
I Before the open, I showed it around the 150 level and closed 45 points below it. Two contracts, 45 points. It's a good day. There's no need to be greedy.
Is which ticker exactly is that? Is because I'm looking at the NDX, but that's at different
No, that's
levels.
the index. That's
Yeah.
yeah. NQ futures are
Oh,
NQ, and then you
yeah.
should pick the expiration. So the current contract up front is the September one, or you could just check the continuous, which is NQ1 exclamation
Yeah,
point
I
or
got it.
whatever.
Interesting. Yeah.
But I mean, I would just assume even the index should be up. I mean, if futures are up, I
Yeah.
doubt. I
It's
mean,
up.
yeah,
It is up a lot. Yeah. All right. Good to have you here, Neil. Awesome. Yeah.
yeah. I was intrigued by the topic of discussion.
Right?
Yeah.
Yeah, me too. Me too. Yeah, Neil, how is it going with the recording of the videos? Are you still publishing every Saturday?
Yeah. The last one was on a Sunday because I was a bit busy on Saturday. But yeah, if I manage to keep it up till August, it's gonna be 1 year straight of weekly recording. So I'm looking forward to it. At least, just to say I keep it up for 1 year straight, and then we'll see from
Yeah.
there.
Yeah. Awesome. Yeah, cool to hear. Yeah, I actually got a lot of advice from people and also did some research realizing I should do a YouTube channel as well. Like if I'm trying to build a community, um, it it if you look at successful communities in this space, like Real Vision, maybe Seeking Alpha, maybe but especially Real Vision, it just shows that yeah, you have to produce a lot of content, a lot of expert content, and build trust that way, and then maybe people will start buying your subscription. So I'll give it a try, and I'm excited. Excited to do it with a friend called Emiliano. He will join future meetups for sure. And the cool thing with him, maybe I told you, Neil, but the cool thing with him is he also built a product, but it's based on individual stocks. So I'll be able to talk about developments from a macro perspective, and then he'll be able to talk about developments from the individual stock perspective, and like correlations of stocks and oil and China and whatnot. So I like that because we'll bring different perspectives to the same trends. Should do for a good podcast.
Yeah,
Yeah.
I guess so. So he's a stock picker, or does
I
he,
th yeah.
trade all the markets, but with, trying
He
to manage the risk with different correlations? What?
I'm looking forward to catch that up as well in one of the podcasts. But he also lives in Zurich and he has been working for at banks for private clients for many years,
Oh,
just constructing like many roles. I think at one point he was an inflation trader, but for most of his career, I think he was a portfolio constructor. Um,
that's good.
yeah.
Those are the guys you want to listen to. Yeah.
All right. All right. Yeah. Yeah. Like when I talk to him, I realize, how deep his knowledge is. He also has a CFA, which helps.
Yeah.
Um, so yeah, I'm really excited. I'm really excited to start with him and see where it takes me. And maybe I'll quit before a year, unlike you.
I mean,
But
just give it a go and then you see how
yeah,
it goes. And
exactly.
at the very beginning, I was betting against myself, and I said, maybe I'll keep it up for 1 month, and then it just become boring, And it didn't. It actually didn't. And it gave me the opportunity to study and to research a lot of different stuff. Because when you have to present people what you are trying to research, you need to put it in a very understandable way, right? Coherent. So yeah, it helps you a lot understanding even for yourself, right?
I agree. Yeah. Yeah. I realized that also with the webinar I did with that Ben just mentioned, the fourth turning one. Yeah, it forces you to research. It forces you to to prepare, and yeah, whenever you try to convey a topic, you learn it in a very different way, much more than when you just listen to something. Um, and I hired somebody to help me with the YouTube channel. So we'll see how that goes. I'm really curious about the quality of the videos. I just did a rec
Yeah.
like if you notice, like I just moved my camera but just a little bit.
Yeah, a little
Uh,
bit of green because now it's the
yeah,
time of you
exactly.
need to have some grass in the background, right? Yeah.
Yeah. I put a plant there. I put this little statue there.
Yeah.
And
Yeah, that's
that's
cool.
it. And here we go. Just, here we go. That's all it takes.
Yeah,
Uh,
What is
man.
the statue of?
it's Hermes. It's the Greek god Hermes, and I bought it when I was in Greece, like a while ago. That's like 8 years ago. And I should be able to tell you more about him, but I really at the time I really liked, like, obviously, like he was the messenger, but it's much more than that. I think he's also like the god of communication and maybe even information and even partly knowledge. So I liked that aspect as well of Hermes, apart from just being a beautiful statue. Yeah,
Cool.
yeah.
Yeah.
By the way, I hope. I mean, let me know about the recording. I thought I'll record it this time, but we can also stop it. I don't know what to do with the recording. Like at the yeah, maybe we could share the transcript if we wanted. Does it bother you, the
No,
recording?
no,
No?
No, it
no.
doesn't bother me. No.
Awesome.
I'm already out there in public saying stupid
You
shit,
are.
so
No, really?
Awesome. Yeah, I'm not gonna spread it widely anyway. Like max maybe in the Discord, but we'll see. We'll see. Um all right. So I got a Google spreadsheet ready where that we can fill in if we like, and or I can just type while we speak, but you can write in there as well if you want. But let me share my screen. So yeah, I'll be sharing one or two. And I'll be curious to hear. It's a cool topic, right? Mm. Um, so I'll be curious to hear from you as well. What
How many mistakes can we say? I'm 75 years old. I made a few in the time.
That's so cool. All right, Ben, why don't you start with one?
Well, the worst one I did was cashing out at COVID. COVID started in March, well, in February, basically. And I started
Mm-hmm.
watching as my investments started that downward trend.
Mm-hmm.
And so around, I think it was the middle of March, I, I went completely to cash, which, I've always told myself never panic. And I actually was panicking at that point because uh, COVID was something I don't think, you know, from a generational standpoint, we had never gone through anything like
Yeah,
this. So
it was a really
Yeah.
scary time.
it, and basically that hurt, and I didn't get back in after I started to see the upturn at that time too. So actually, that was about a $200,000 mistake.
Yeah.
So
When did you
that
get
one,
back in?
I got started getting back in about April.
Uh, that was 2020.
Yeah, all that's 2020.
Yeah. Ah, yeah, the markets were ripping, right?
Oh, I, I look at the markets all the time, all through my going back to the 80s,
Yeah.
and I've never seen anything. Well, 2018, yeah, 2008, there were some similarities, but that one was just, it was like it went off a cliff. Just, it
I
was
Yeah.
it was a total panic. We
yeah.
can go when you start looking at it, it's, let's see.
I remember it was I mean I noted here it was 41 days from
Yep.
top to bottom. Wait, I think I got the bottom exactly. No, almost exactly, yeah.
Yeah.
So it was 42 days. 44
Yeah,
days. Yeah.
and I
Hmm.
So
didn't quite think it was I almost thought that was a dead cat bounce
Yeah.
when it hit the bottom and started going back up. I should have trusted, you know, but we didn't have the best president in there at that point, so he was being a little bit erratic too. So
Hmm.
you can't let politics rule your investing. It's another
Yeah.
lesson I
yeah,
learned out of that.
yeah, that's
Um,
a big issue there. Yeah.
so you would say never panic,
Never
especially
panic.
not in a bear market, like or in a downturn.
Well, when you perceive a downturn, it's almost don't do anything
Yeah.
and just watch the
Yeah.
numbers. That's what I normally do that, and I didn't do that.
Uh, I had a similar feeling. So in the recent downturn, oh, that was, by the way, this here. Oh, that's funny. So this
I
here is
almost did it.
obviously this is not even 2020. Yeah, I was in the so this the current downturn, the Liberation Day one, that was 44 days. And I remember before it's at 41 because that's that's when I actually counted the days. So apparently just like 3 day before the bottom, I actually went back to previous recessions to count the days. Yeah, here's COVID. COVID's even more extreme. That's only 33 days.
33. It was basically 1 month, and
Yep.
right in the middle of it is when I just, oh no,
Yeah.
I gotta bail.
Yeah.
But that was such an extreme one. But you're right. This last one got me thinking the same thing again. But I'm in about 35 individual stocks. And so
Yeah.
it restricts you from making moves like that, you know,
Uh,
which is a good thing, I think.
I it was interesting this time. It 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 felt a bit similar, no? Like it was not as dark as COVID, but you just didn't know like if, is world trade gonna change forever? Are we completely gonna cut off China? What's the impact gonna be on inflation? And I remember talking to friends and they asked me, should we wait and and I told them, well, like I would buy, but you can dollar cost average in, so maybe with a third of what you were thinking of. But looking back, it's the fear and greed index is pretty good, no? So looking back,
Exactly.
like if it's here, it's usually a great time to buy.
Always a great time to buy.
Yeah,
That's a good
right.
point there. Always go to the fear and greed aspect.
Somebody told me that recently that what she does. When it goes here, she buys the U Pro, the leveraged S&P 500, and well, it worked this time as well. Maybe you would not have hit it to the day because it stayed on fear for a while. So you might have gotten in early.
Yeah, it's interesting because my brother-in-law is an orthopedic surgeon, and so he's only kept most of his stuff in ETFs,
Mhm.
and it was not heavily diversified ETFs. So that one, he lost almost $1 million.
Jesus.
In this downturn. Sorry, Ben. Did we just lose Ben?
Might be temporary, hopefully.
Now that you were quiet too, Neil, I wasn't sure if it was me. Um,
Yeah, no, I was listening. Yeah.
yeah. Um, yeah, wow. Yeah. Yeah, I guess, yeah, panic selling is just I think many people regret that. I also heard of
Like,
somebody that did the
why
same
we
in
wait
two.
for
Hmm.
Ben to come back up online and finish the
Yeah,
story. If you just check how those two downturns, both March 2020 and the recent one we got for
yeah,
retardation day, right? They are basically almost the same on a different scale of magnification. You got the initial drop, then you
yeah,
got the bounce, and then it
yeah,
really shit itself. It works off a higher low, and then it keeps resuming the uptrend. So I guess, when you got that initial drop, as Ben was saying, you should do just nothing because you don't know, you don't have information, and
yeah,
everything is driven by fear. So just wait it up. And, even if you look, the market kept on going down. That's right. But if you just plot a set of moving averages on those two dumps, you see that after the initial push down, you got a brief period. It might be 3, 4, 5 days. The market kind of take a break, comes back up, it retests back into those moving averages, and that's your opportunity to the risk if you want to. So, I mean, just instead of knee-jerk reacting, just wait it out. The market, even bear markets, real bear markets like 2008, if you count the amount of bounces that we had throughout that period, we are talking sometimes 15, 20, 25% bounces.
yeah.
That, you got many chances to get the fuck out of the way if you wanted to.
Uh, yeah, that's your point. Like wait for one
That
of the bounces to touch the moving average, and then you can get out if you want. Yeah, maybe.
that is
Yeah,
so true.
Yeah,
because I
You hit it
mean,
right
look,
on the head.
if you think about the tariffs, regardless whether you agree with them or not, as we were saying, you shouldn't let political biases to infect your thinking. But look, the markets at the end of the day, they were ready for some sort of a 10% overall tariffs rate across the spectrum. So they just repriced down. You just factor in the tariffs, the potential impact on inflation, the potential eroding of earnings and revenues for companies, and they were just pricing in a 10% flat tariffs. When the man came in with the board looking at 45% on this, 50% on that, we are now tariffing an island which is just inhabited with penguins, the market just shattered because that was unexpected. The market wasn't pricing that in. And
yeah,
that's why everyone just the risk all at once. That's what you got.
yeah. That was here, April 2nd, and
Yeah.
the market the next day opened at minus, yeah,
Yeah, you see, it
4%.
gapped down basically two sessions in a row.
Yeah,
That's what markets do when they
yeah.
feel the pain, right?
Yeah, it's an interesting one, and I think one that a lot of traders can relate to. Yeah. Uh, what about you, Neil?
Oh well, as you well know, I'm way younger than you guys in these investing macro world. So my biggest mistake was kind of the millennials mistake, right? I lost a lot of money in cryptocurrencies, of course.
Oh,
It started out
Oh boy.
with Bitcoin initially. I initially bought Bitcoin in February 2018. So basically at the peak of the market.
yeah,
And from there, the market just went down for another almost 3 years.
yeah,
And then when I started to suffer the initial loss, I said, you know what? I'm reading on this blog by whoever, it doesn't matter. I know nothing. So I'm trying to scrap information wherever I can find them. And of course, since I'm new to the game, with the benefit of hindsight, I can look at myself in the past now. I'm just seeking for information which are just confirming my bias and my hopes. So you know what? I'm going to move my money at a loss out of Bitcoin and putting them in the altcoins because, Bitcoin tops out and then you go alt season. It just so happened that those altcoins came down another from 40 to 70%. So I
Oh
woke
my
up
gosh.
like 9 months later and I was down like 80K, something like it in 6 months. And yeah, it was atrocious. I mean, that was a good, how do you call it? The baptism of fire, something like it. Yeah, I got burned pretty quickly and pretty early in my, so to speak, career. So yeah, that was it in a nutshell.
um, what's the lesson?
Well, the lesson, of course, looking back at it now, it's don't just buy something that you don't understand,
Yeah,
because that essentially that's what I did. Bitcoin just made new time highs in 2017 at the end. I guess it was November,
yeah,
December, and all of a sudden, yeah, it just I just did what I think the majority of people do. I read the news, I watched the TV, I read the newspapers, and everyone was talking about this magical internet money. It's gonna go to 50K from here, and so the your average third, what is gonna think? Myself in this case, well, I can still double my money, right? If I get in even in here, right? And instead, I just lost a good bunch, right? That's classic,
That's that's the proverbial fear of missing out.
Yeah, yeah, exactly. And
yeah,
the best part is that initially I didn't deploy it all at once, right? I bought in like I put in 25K. The market went down another 7-10%, and I say, you know what? I can just take advantage. I'm gifted, right? So I put in another 25. The market kept on going down. Yeah, but at a point it got to bounce, right? It's gonna reverse. I mean, they say it's gonna hit 50K. So the more it goes down now, the more I can buy advantageous prices. Well, it wasn't the case apparently, right? So yeah. And the thing about what I was saying before, even in a bear market, you got many different rallies which offers you the opportunity to the risk. That's a lesson I learned there because I didn't basically take that advice. Look at how many times Bitcoin bounces, and I never de-risked. I kept on holding my bags while I was slowly looking at them going down and down and down. Instead, I could have saved a good chunk of their capital. It's easy to say now with 6, 7 years under my belt, but 2018, little bit I knew, right?
yeah. Awesome. Yeah, I have also one lesson with Bitcoin. And I was lucky I got in. I got in at this amazing point here between $200 and $600. And then I
Oh,
sold
wow.
90% at 7K, which was, it's not too far from the high, but it still tripled. So I sold in November 17, and then it went to 20
Yeah,
um, in December. And so what I did was I bought back in. So, but with half of it because I moved half away from the crypto exchange. But the other half I went back in, I think at 15. Um, but I think my learning was if you cash out, like unless you like super unless you have a lot of conviction, don't do it with 90%. you know? Like
Mm,
that was my learning. Just I could have cashed out at 7K with what, like 50% maybe, something like that.
yeah,
And then I would be happy if it falls because that would give me the opportunity to buy back. But I would also be
yeah,
happy if it kept on rising because I would still be
yeah,
invested.
yeah,
So so my so selling Bitcoin
yeah.
at 7K, you
Ideally, you should never go 100% cash because even psychologically, right? Then it's hard to find reasons to get back in. While it's easier mentally, it's easier to add to something that you already own instead of starting to build up portfolio from scratch.
Mhm.
That is so true. That's what kept me out of it with, the on the COVID side. When you go to 100% cash, you're hesitant. I mean, a
Yeah.
lot more hesitant.
I mean, to be fair, COVID was, one in a generation type of event. I think, we had many different dumps or crises or crashes in the past, but I guess this time around, even much more than 2008, like people are so interconnected, like social media, blog posts, and YouTube channels and whatnot. People are so attached to the social media and the life on the internet that all the fear it's spreading out even faster and it sticks because fear sells. So all those different financial outlets or gurus talking about the end of the world as we know it. I mean, it's hard to face that type of external stimulus. It's a really assault on your spirit, in my view.
Exactly. Real good point. Assault on the spirit.
Yeah.
Yeah, awesome. Roger, can you hear us?
I can.
Awesome. Good to have you here.
How are you
Do you,
today?
very good. Do you want to share a story of yours?
Silvan and I have chatted a little bit, and
Oh yeah.
I have a different view of the world. What you're talking about, they refer, I think the term is chartist. So you look at a chart and it goes down, you buy, it goes down. Do you buy more or do you sell? There's no, it's, if you look back, you can say, well, I would buy here and I would sell there, but you can't look back. You can only look forward. So, uh, trading stocks is fun. I know a lot of very successful people. It's sort of a game, and you try to see if you're how smart you are, how wise you are, maybe. Um, so I only own one stock, so maybe I'm not a very good person to talk about this, but uh, and Bitcoin, I don't own any because I don't understand it.
Yeah.
Certainly, a lot of people have made a lot of money, but a lot of people have lost a lot of money, and some have made and lost everything they made.
Yep.
So, what I talked to Sylvan about was to think long term what you want your net worth to be when you're 65.
Mm-hmm.
And then you make a plan to get where you want to go.
Yep. That's true.
So, so that sort of guides what you do today,
Mm-hmm.
rather than being somewhat random. Uh, and people are talking about Bitcoin. So there's in psychology, there's a recency bias. If everybody's talking about Bitcoin, well, guess what? You want to own Bitcoin.
Yeah.
But that does it take you where you want to go, or are you just having fun? So
Roger, you're the one that buys Canadian businesses, is that right?
that's
Or
correct.
okay, okay. And most of businesses that you buy are they're not liquid, they're not publicly traded, right?
No. Uh, I tried a bunch of different things and I lost a bunch of money. But eventually I figured out we buy companies that make money
Yeah.
and they made money for 30 years. And so we think if we structure the financing properly and if we can keep them going for like 2 years and pay off all the bank debt, then there's very little risk. They've shown they can defend themselves for 30 years. So we think we can keep them going.
Mm-hmm. Mm-hmm.
Is it more of a, some sort of a type of a Warren Buffett type of philosophy, never buy something which you wouldn't hold on to 100 years or something? Or are you actually engaging in private equity, just to understand the framework?
Those are good questions. Uh, I don't, the private equity that buys and sells, I don't like that. So more like Warren Buffett.
Got it.
And my son is 30. How old's my son? 35. And they have sales of about 200 million now.
Mm-hmm. You mean the businesses combined?
Yes.
Yeah.
And
Yeah.
so, but the first one did maybe 400,000 EBITDA. And then you pay down the debt, and then you borrow money from that company and you buy another company.
Hmm.
And I yeah, I remember you told me that you buy those privately owned businesses. I guess you buy them outright. Uh, uh, or another, no, actually, one thing you said was, don't you buy like 50% and the owners the rest you'll buy
We always
later?
we always buy 100%, except once we bought 50%, and that caused us quite a few problems.
All right.
The person who owned most of the other 50%, um, we had problems with him.
Yeah.
We weren't aligned.
What
So,
was, but
Okay.
you said like one trick that allows you to avoid fraud.
oh, the vendor take back.
All right. What's the vendor take back?
So if a company is doing 1 million EBITDA,
Hmm.
then for example, we would pay 4 million,
I'm on
Hmm.
this
and
webinar.
then we would we would put in
Yeah,
1 million
they hear me good.
cash,
Hmm.
and we would borrow 1 million from the bank, based on the assets, a little bit of the cash flow, and
Uh-huh.
then we would use a 2 million vendor take back. So we would pay the vendor over 5 years. We would pay him 5% interest. And so we have no fraud because he wants his other 50%.
And what would have happened if let's say EBITDA shrank or something? Like,
This is a company which um, uh, uh, we've got 2 years. Can we see 2 years ahead? Um, and it's made money every year for 30 years.
yeah,
So if we look and say, can it make money for next year and the year after? Uh, we're pretty sure it can.
yeah.
And sometimes even the owner will stay.
Yeah, to ensure that, it stays profitable.
Well, yes, and one of his motivations, he needs something to do, and he wants his other
Yeah.
50%.
Yeah.
Yeah.
And
And
what were the conditions for the 50%? Like in what case would he not have gotten paid?
well, there's the company guarantees the debt. So if the company goes bankrupt, which is like very unlikely. But then if it goes bankrupt, it means it wasn't worth 4
Yeah.
million.
And he
Uh,
got nothing, right?
he's already got 2 million, right?
Yeah.
Yeah, but if the if the company grant for the loan, right, and then the company goes bust because either it was a fraud or it wasn't good, it don't get the rest of the 50%, right?
Well,
All
I mean,
right.
one would argue he doesn't deserve it.
Yeah,
Yeah, yeah,
yeah, for
exactly.
sure.
Yeah.
These
Makes
are
sense. Yeah,
theories, um, but the facts are we buy companies from people. These are my heroes. This is somebody who has built up a company
Yeah.
over his whole lifetime and built systems and financial awareness and products and services that people really want.
yeah. So this is more like value investing. You're not just speculating on pieces of paper on the internet like stocks and shares and whatnot, but beside making money for yourself and even paying the original founder and creator of the company, you're actually investing in something which you might say kind of has a mission, right? To produce and deliver goods, services, and value to the actual people, so to the real economy, right?
Oh, yes, it's
Yeah,
real. We distribute
yeah,
wine.
yeah,
We fix heavy trucks.
yeah,
Uh, in fact, this is a great story. A guy up north, northern Canada. So it was a mechanic, and a guy came along and said, "Can you fix my big truck?" And he goes, "Well, I need a machine. It costs $500,000, but if you get your truck fixed, I'll get the machine." So when we bought it, he had like $17 million worth of machines, and he could fix anything. And people came from hundreds of miles around to get their trucks fixed. And it's a logging and oil and gas and lumber
yeah.
trucks. And so it's a very good business.
Yeah, very smart.
That's
It's very
that's
insightful. For me, I wasn't, I never thought about it from this angle, to be honest. So, yeah, very nice story, very nice approach. Thank you for sharing.
yeah.
Oh, yeah.
Yeah. Same. Thanks, Roger. Um, what because today is also about mistakes. Like, what was your approach before you started buying businesses?
Before we started a company to rent motorhomes to German tourists, mostly German,
Yeah.
to go up into the Rocky Mountains.
Yeah.
And the president never put in any money. And so he always wanted a raise. He wanted free shares. And then there was some fraud, and the company went bankrupt.
Oh, so you
Okay.
learned a lot about fraud.
So now everybody has to put in money.
Yep.
Yeah.
Everybody has, you can see what I'm talking about. Everybody's on the same side of the fence.
Yeah, it
Every,
creates the incentive structure. Yeah.
everybody wants the company to be successful.
Yeah. And not just milking it. Yeah.
Uh, so interests must be aligned. Um, Everybody should be on the same side.
Yeah. The first company along this route, yes, my partner and I, we each put in $200,000,
Yeah.
and then we used that company to buy another company and so forth.
Hmm. I love that. Yeah. Did you ever did you also do other investing than buying private businesses? Did you also ever tap into the stock market or something like that?
You know, I have, but with stocks, on average, you will make over many years 10%.
Yeah, nominally.
If you buy a company that makes $1 million and you put in $1 million, I'm sure you can figure it out, Sylvan. You make 100%
Each year.
each
Or
year.
yeah. Do people sell for 100% EBITDA?
For 4 times?
Yeah. All right.
Oh, yes.
Yeah.
Yes. My former partner in Toronto, yeah, I just got email. He bought 2 companies, 800,000 EBITDA each, 3 times EBITDA. He's closing this month, 4 million EBITDA for 4 times. And next month he'll close 5.5 million EBITDA for 5 times.
Uh, EBITDA doesn't tell you anything about debt ratios, right? Like how does that factor in
There's
in
lots of ratios,
hmm
and the bank loves them. Uh, and we borrow money from the bank, right? 1 million, using that same example. And so they won't lend us the money if those ratios are not in
Yeah.
line.
Yeah.
So we check, but mostly we don't care.
Yeah.
If the bank's happy, we're happy.
So I got a
Yeah.
question because I'm not sure I understood that correctly. So when you say stocks on average, they return you 10% over a set period of time, I mean,
Correct.
I think you're not talking absolute returns. It should be compounded, right?
Yes, but comparing apples to apples, in the bank, you get on average over time 4%. In stocks, on average over time 10%. And then business, like structuring it this way, 100%. But the same with stocks, it can be compounded, but also with business. So return on invested capital. So that means money out of your pocket. Okay. So the first
Okay.
one, if you put in 1 million, that comes out of your pocket. The
Yeah.
second company, when you buy a business, then you put in 1 million, but you get a line of credit, right?
Yeah, yeah. I mean, so once you
And then,
have covered the initial investment, all the rest is some sort of free roll. Yeah.
but a little bit different. You pay down the line of credit. You
So
make a profit, pay
so
down the line of credit.
hmm so
With
you
the
pay back the
Okay.
bank?
you pay down the bank loan
Yeah.
and the line of credit. So two things. Then when you want to buy another company, you can borrow the line of credit again on that company.
What's the line of credit?
Well, you have accounts receivable and accounts payable. So you
Yeah.
need money to run the company and you pay it down, but you can borrow it back on that company and then you can lend it to buy company two. So
Uh,
that's not money out of your pocket.
So
That's
when you
money.
say line of credit, you mean just any creditors that the company might have, the business might have?
No, the bank gives you a line of credit.
Okay.
It's a floating line of credit, and you pay it down, and then you borrow it back.
All right. Yeah.
And it's you borrow it back all in company one, but you can lend it to company two,
Yeah, yeah.
and then that's a debt, and then company two it pays it back.
Yeah. And
So,
so you borrow it back to buy more businesses?
well, yeah, and then the third company, of course, you have two lines of credit, which you can borrow from. Maybe you have to put in more money also if it's a bigger company. But that's just you just structure it properly.
Yeah.
Yeah. It sounds like another way to say leverage and deleverage, right?
Yeah,
Yeah.
that's right. But I was trying to get to your point about compounding. So it's 100% a year, and it's easy to talk about, but you can do better
Yeah. I
by
mean,
using
absolutely.
company credit.
There's
So
the old saying goes like, if you want to make money, start a company. Don't just work 9 to 5. That's not the way to make money.
so I have an opinion on that as well.
Yeah, hit me up.
80% of new companies do not last 5 years.
Uh-huh.
Yeah.
So 80% of franchises do last 5 years because they have a somewhat proven formula.
Mhm.
So the problem with franchises is you have to pay a franchise fee
Yeah,
and
yeah, that's
you pay a
bullshit.
lot of
Yeah, never
money.
like that. Yeah.
So it made more sense to me to a company that's been around for 30 years. It's sort of like a franchise.
Yeah, at the very least, we can agree it's a brand at that point, right? So, I mean, it's well
It's
known,
a
well, client
proven
base established, right?
a proven formula.
Yeah, yeah, you get that. Yeah. But I
Um,
mean, in order to be able to get the company and then sell it out at a profit, you need to start it in the first place. So, the old saying still goes, right? Start a
I,
company.
I just buy the company because I it takes 30 years to build it up.
No, well, yeah, in your case, right. Okay, I get it. It sounds, sometimes when you describe it, it sounds a little bit, with all the due nuances here and there, of course, but it sounds a little bit like house flipping, right? I buy this property, I make some renovations, and then I try to sell it out at a higher price, right? And then I reinvest the money in another property, and I repeat the rinse and repeat. But yeah, I get the point. You buy it because in order to build it up from scratch, it would take you half of your life, right? So it's way
So
faster if you got the capital to buy up. Yeah.
uh, two things. I just wanted to, Sylvan, it was 80% of new businesses don't
yeah,
last.
yeah. All right. Thanks for correcting.
Second thing is, I don't like to sell
Yeah.
because I have to pay tax.
Yeah.
I wonder where taxes were going to come in on this. That's what I've been listening
Yeah.
on the.
So, yeah, you renovate, you sell, you pay tax, and that uh, some people phoned from Toronto and they wanted to buy a business, one of our businesses, and maybe 10 times EBITDA. And I told my son, you pay maybe 50% tax. And so you're down to 5 times. And then you have to go and find another business and buy it at 5 times. So
Yeah.
I
Why
said
not?
I
Yeah.
wouldn't do that. Like I just
Yeah.
because it takes the same amount of time to sell a business as it does to buy a business. So why wouldn't I spend that time just buying another business?
Yeah. I love that. I guess if a business is profitable enough that you can pay back the loan and then leverage it up again, uh, to buy another business.
That's the
Um,
key point, Sylvan. We look at how much we're paying and can the business pay the debts?
yeah.
And if it can, we're pretty much done.
Yeah. Um,
So
yeah.
from the
I.
tax standpoint, are
Mhm.
you just going to, your son will inherit all this, I assume.
Uh, yes, and he took finance and law, and he's very good at it. Um, so that's the plan. And his kids, I don't know, but already I'm brainwashing his 2 year old, his 5 year old son.
I got a
Gotta
three
bring
and a
them young.
five-year-old grandson. It's not
Yeah.
easy.
I took them to one of the manufacturing companies and showed them how we make things, and so that my ulterior motive.
Yep.
I have a question. Do you
Yes.
stay in the lane of manufacturing or do you ever go outside that?
No, we distribute wine, we distribute air conditioning. We have what we call a mechanical. So they install things in high rises, senior citizens' homes, multi-family developments, those types of things. I mentioned the heavy truck repair. Oh, we do. We just recently started pavement. I don't know what you call it, but building roads, paving roads,
Yeah.
Infrastructure.
Yeah.
infrastructure. So, and we also supply big builders. So they will order maybe 500 doors, and we will get them and install hardware on them that we sell, and we sell the doors and we deliver them to the builder. Those types of things. So,
Ben, was your question if Roger is involved in the operations or 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 did he answer your question?
He answered the
uh,
question because it was interesting because you said you're out of Toronto and that's where all this real estate speculation seemed to
oh,
occur in Canada. So I was kind of wondering if some of this was real estate, but he answered the question.
I see.
um,
Awesome.
uh, so it was a phone call from Toronto. We're actually over in Calgary on the west side. Um, the we with some smaller banks. There's the big five banks in Canada, and then there's smaller, like a government-backed bank. We can get 100% financing for owner-occupied buildings. So if a building we're in comes up for sale, we will buy it because we can get 100% financing. And then, so therefore, an infinite return on our invested capital, right? We don't put any money in.
Yeah. Um, I mean, of course, that is advantageous. Can't argue with that. But just as an aside, if you think about that dynamic, that that's basically what created the housing bubble in the US in 2006 and 7, and then most likely it's going to create another one in the future. Like, I don't think when it comes down to housing, I don't think like allowing people to afford houses they can't really pay out, right? I mean, back in the days you had to put down 25-30% up front, and rates were at 6-7-8%. Then we got the brilliant idea that everyone should be entitled to own a house, which for me is absolute monstrosity. Like, I do think housing, it's not a right, it's a privilege that you need to earn it and you need to be able to maintain it. Otherwise, we see how it goes. So, I don't think that, on a regulatory framework level, allowing that easy access to credit in order to buy houses, it's a good, over the long term, it's a good thinking overall.
Uh, so we don't buy houses, if that helps you. Like they're industrial buildings that we occupy.
Yeah, no, no, sure. As I said, as an aside, right? I wasn't talking about your business specifically, but you mentioned like having 100%, what you call it, low LTCV. What's that? Loan to value ratio, whatever you. I don't
Oh,
remember the metrics, but I don't think.
EBITA.
Yeah, I don't think you should
We
allow
found
people overall to
the
buy
only
that stuff.
the only reason we do it is because the debt payment is very similar to the mortgage payment is very similar to the rent that we would pay if we allowed someone else to buy it.
Yeah,
So,
yeah, yeah,
and,
exactly.
and
Yeah, that makes
in
sense.
real
Yeah.
estate, commercial real estate, you might get, it's all different, 15% return on investment, right?
Yeah.
So it goes up and it goes up, but it's slowly. We only do it because we can get good financing, and
Yeah, yeah.
it makes no difference to the company to pay the rent or a mortgage, and then in 30 years we'll own the building. So
Yeah, no, I guess in your specific case, it makes a hell of a lot of sense because, if what I'm paying on a year-over-year base, it's basically the same whether if I buy it outright with financing or if I rent it. If I
uh,
need to pay the same rate, I might just well own it. So if, I want to do something with it, I'm free to do it. And I don't have like a lot of different limitations on what I want to do with the property that I actually own. So yeah, for the same price, right? So yeah.
yeah, honest. I grew up in a small town in northern Manitoba. Maybe you don't know where that is, but uh,
I can
it
just
just
assume it's in Canada, right?
Province of Canada.
Yeah,
yes,
all
it's
right.
a
I'm
country.
not particularly familiar with Canadian geography. Yeah, sorry about that.
That's okay. But it's just things should make sense. And you buy companies from people you like,
Yeah,
and
yeah,
you hire general managers to run the company, and they're a good, honest, decent people. And you pay them well. They're very happy to work for us.
true, true. Yeah,
And we're not greedy, and we're not trying to flip something or do something dishonest with our customers. We're trying to look after people and their spouses and their kids so that they have a great life.
yeah, yeah. I mean, that's a very sound and solid entrepreneurs type of mentality. Yeah, I can see that.
It's my small town view where everybody's a neighbor.
Yeah, I mean, if the world would run on those same principle, we will be all much better off than what we are right now. Yeah, absolutely.
Yeah, I
Well,
No,
love
that
that.
I
this is back to
know.
the fourth turning. We have to get back
Yeah,
to
yeah,
that level of community.
yeah,
We're broken
yeah,
up now on that, especially in America. Canada,
yeah.
I love because I'm French Canadian. My grandfather was French Canadian. Now, don't hate me for that because I understand uh, the issues with, Quebec and everything, but it's
No, I dated French Canadian girls from in
oh, they're the
Manitoba.
best. I lived in
Saint
Florida
Rose,
for a long time too.
Saint Rose du Lac, if you get a chance.
Yeah,
Uh,
I love that.
I, I
That
don't
those
know.
were some.
There's certainly the news, which I don't trust 80%. But we have tried to buy businesses in the States. They have different tax rules, and so it was very difficult, but we're still looking.
Okay.
Uh, and there are lots of good people in business in the States.
Yep.
So um, we also want to expand to Ontario, and the purpose of all that is diversification, not only in our companies but throughout the economy. And then the Canadian and American economies are somewhat parallel, but when they move out of sync once in a while.
Yeah, that's very good. I mean, I rarely happen to meet up with someone which actually grasp that correlation in between the Canadian and the U.S. economy. But yeah, that's true. If you look at the data, there is a good degree of correlation in between the two. I mean, it's
Yeah,
logical. They are very tight trading partners, so
that's
but
right. We
at the same time, funnily enough, it doesn't really happen with Mexico, which is again another huge, huge trading partner with the US, right? So yeah,
uh, yes. On that point, we would look at Mexico, but different laws and different language. So that makes
yeah,
it
yeah,
different for
Yeah,
us.
absolutely.
yeah,
And,
I can see that.
we've got trading of what, 400 million people. I think we're good for my lifetime.
I guess so. Yeah,
I feel like we could go on forever. I'm so glad all of you joined. Yeah, I feel like we need another session on mistakes or whatever. But my question would be, what would you like to do in future meetups? Yeah, do you have any feedback right now?
Uh,
Who goes
I guess
first?
one thing I don't know the individuals uh, involved, and I don't know their oh, maybe Ben Lalonde is in Florida.
I'm actually
Right.
in Houston now.
Oh,
I I married my wife in Florida, but there's a lot of snowbirds from Canada
yes,
in
sure is.
Florida, and
Uh,
real estate speculation down there is just
Real
it's
estate, uh, the banks like real estate, right? Because they can repossess it and
no
resell
kidding.
it. But from my bias, when I stand on a hill, I look as far as I can see is real estate. But for me, what I see are companies, thousands of companies. So, and I can get a better return on invested capital. And so that's my bias.
No, that's a very good bias to have. It's back, like you're saying, companies are built by people. And if you
Yes.
trust the people and you protect against the fraud, it's a win-win.
Yeah.
And that's what you have to search for.
Yeah, and you can have a tangible impact to the world. Like sometimes I feel what I do, yeah, it makes me money, but I mean, if I'm not here tomorrow, nobody's gonna notice that. Like I'm just buying and selling contracts on an imaginary electronic machine, and
Oh,
they are just real because they get deposited in my bank account. But I'm not creating anything, right?
so do you have kids?
No, not yet. I guess, yeah, I guess that might change perspectives, right? Yeah, if you want to
Uh,
build something to leave them, right? Like a
even
legacy or something.
I think I got a bit lucky because my son liked business. But my two daughters, even one was a chartered accountant, but they didn't really like business.
Okay.
So, and I told them it's okay. Uh, when I was 65, I said, if you don't like business, I'll just sell everything and
Yeah,
I'll travel the world. It's okay. So
yeah,
there
yeah,
was never any pressure for them to get involved.
yeah, sure.
Because I'm having fun along the way. Partly I was a dentist, and early on, maybe 1 year after graduate, I went to Hawaii and I was standing on the balcony. It was so gorgeous. And I thought, I can't afford to be here. I have to pay, $500 a day for a hotel, and I'm losing $500 a day at home because I'm not working.
Yeah,
I need to figure out a way that I can, if I want, stay in Hawaii.
yeah, that's true. But I mean, you know what they say, if you love what you do, you're never gonna work one day in your life.
Yes, yes. Just to be careful because um, you have to be happy and you have to make money.
Yeah, yeah, yeah. I mean, the what the first, yeah, the principle of making money was a given. Yeah, but you can make money in many different ways. But if you don't like the way you're making money, I guess at a point you're not gonna be as happy as if you were also enjoying the process,
Uh,
which makes you
yeah,
money, right?
yeah. And happy is a funny word because no matter what you do, there's problems.
Yeah, yeah, absolutely. Yeah, yeah,
So you have to be, it's hard, but you have to be happy solving problems. And sometimes the problems are people problems, which are even more difficult. But it's okay.
Yeah, which is one of the things that I don't miss from my life in the business world. Like now I don't have to deal with people. Basically, I work alone, which, has its ups and its downs, but no HR, no, my kid is sick, no anticipated vacations and whatnot. Yeah, I don't have to deal with people.
That
You
might
know,
change in the future. Huh?
it's
It might be, it might be.
it's it helps. You have some problems, but you're making $1 million a year, so that it offsets a problem a little bit.
Yeah, again, I guess a lot of that as investing in general, it's very subjective. Like I might not make $1 million a year, right? Uh, Last year I made just 300K or something like it. But for the entire year straight, I worked on average 2 hours a day. So,
Yeah,
you find the balance there, right?
yeah, and
So
that's why.
it's subjective. It depends what you want. I value more my free time. Like if I want to go on vacation whenever I want, book a flight at the very last minute. I don't have responsibilities. I don't have people to take care of. I don't have a business to run, clients which are calling me. I'm making the money that I need, actually more than that. So I'm just enjoying my time on Earth as much as I got, right?
Oh, uh,
No, we're
it,
going to get
that's
into the millennial slash what?
No, I'm
um,
not. I'm not a millennial, to be fair, right?
I think you are, Neil, no? Like, what's your age, Neil?
Well,
You that
I
young?
got no 36, so
Yeah, yeah,
I'm
yeah,
not a
me too.
millennial.
Yeah, you're a millennial.
Yeah,
Yeah.
so
millennial for
to
sure.
be
You're
clear,
talking to two old boomers.
I mean, it might be because I'm right in the middle, right? Because you are boomers. I don't even know the definition at this point. It's clear, but uh, I'm almost at in my 40s. I'm talking with people which may be like 60s or 70s. And on the other side, I got these guys, 20s, and they also talk like they are gonna eat the world. And every single time I go out in my hometown, I see them failing. So I don't know. I'm the generation in the middle. I
All
don't
right.
fucking know what to
All right,
think.
all right.
Yeah.
Let's do a
I will
closing
ask.
round. Um,
Yeah. All
how
right.
how about Neil, do you want to start?
Well, for me, just today, what I got from this conversation was particularly cool. Listening to Roger laying out his approach to, investing or building up wealth. It was something that I kind of grasped throughout the years, but I never really heard someone laying that out, step by step with the very specifics and all the potential issues or aspects of it, the nuances, right? Like the financing, the taking out the loan from the bank and then flipping out to the other company that you want to buy, the rest, the line of credits. That was very insightful for me. So as for me personally, I think I got a lot out of this conversation. And I guess, as for the future, I would expect, or at least I would be delighted to get more of these, like things that
Yeah,
I
me
don't know,
too.
learning from people that knows more than what I do. Yeah.
Story, me too. I really enjoyed that. Thank all of you for sharing stories. But Ben, can you go next?
I would definitely say I learned a lot on this one from Roger. I've had a couple of friends in the oil and gas industry go outside and start their own companies, and there's some similarities here. It's that percentages. You want to have 100% of the company that you own because the friends that did, you know, 60/40s,
Yeah.
always a disaster. Just
Yeah,
always a
Yep.
disaster. So
yeah,
it's great. I like this format because it's just kind of you're learning something totally new. And at 75, you think you've seen it all, but you haven't. This was really, really good.
yeah. Wow. Thank you, Ben. Roger. And
I can help you a little bit. Um, I'm afraid I did too much talking today, but not enough listening. But I'll try and make a long story short here. I hitchhiked through South America for 2 years. I got a couple of degrees before I went into dentistry. So I graduated. I was 33. I got married at 35. Made some bad investments. basically bankrupt, not bankrupt, but I had no net worth at 40. So we've built everything up since then. So you guys are very young, have your whole life ahead of you. And if you decide what your net worth you want to have when you're 65, then you make a plan to go there. So I only bring up net worth because it's easy to measure. You need intellectual, emotional, spiritual, and physical to be well-rounded. So it's not just money. It's not just material things. So
Today
Amen to
was
that.
very philosophical. I love that. Yeah. And
Yep.
thank you for your time and your wisdom. And I hope I really hope to catch up with you again in one of those sessions or anywhere else. Thank you.
Thank you.
Yeah.
Till next time.
See you.
Silvan.
okay.
Thank you guys. Thank you.
Bye-bye.
Bye.